All right, welcome to the morning report. Today is Monday, July the 13th. We've just begun the new earnings season, um, and we'll be looking at a number of different things. This morning, I want you to consider um, a couple of things when you're looking at the charts. Now, I always say, hey, listen, consider the big picture. The next thing I want you to think about is consider the important picture. All right. And so we are going to take a look at the ES and realize that we are in a flat to slightly downward sloping formation. It's just fallen out of the rising wedge. Um, I tweeted this and I also put it in a blog post. So you should see that this wedge is broken. And my thought was, hey, listen, we could bounce easily into the midline of this region, which is really anywhere around 2090 to 2099, depending on how much strength the chart has. But then we should see a pullback. Even if the chart is going to extend further to the north, it should see a pullback. Let's think about the important events. One, we've breached the 10 simple moving average here on the daily in this particular formation. We breached it, we came back, we retested it early in the morning, and then have moved up during the course of this was on the 10th. This is the 11th. And so that happened on Friday. And so this upward motion into this area is continuing, and we're sitting up at, 2087-ish at the very top. There we are right there, taking a look at the ES. So here are the important things: the cross of the 10, the hold of the 10, the rejection of the 50, and negative momentum that is trying to drift upward in our fast SMI. So in our mind's eye, we should go, okay, I dropped down. That's a negative momentum event. I came from underneath my moving average, held it up, and so now I should be caught between these two moving averages until they make a decision. So that is our very big picture, and that is really the most important picture. Ultimately, also because we have this very weak trend line that we have broken more times and come back to test. What's the slope of the current momentum? It is positive. And so we expect a punch up here, but only into resistance. And so momentum is telling us that long action is a likely possibility. So how do you create the long action event? Taking a look at what's happening, we've got to go into a tighter time frame. Here's the hourly chart in the ES. We can see that for the last 1, 2, 3, 4, 5 hourly candlesticks, we have held the 2081 level. And so 2081 is now our litmus test in terms of support. What are we seeing? We have technical divergence on both formations. If we look to the last peak and trough, we can see that our peak is here, and this retest on the peak is also up here. So there's a little negative divergence. What do we know about negative divergence? Until we lose a level, that divergence has to be ignored. The location of the momentum indicators suggests that buyers are sitting here in the charts, and our 4-hour chart also is showing that acceleration upward. So we must anticipate that pullbacks are going to be bought. That being said, the question is, although we know that pullbacks are going to be bought, can we trade the pullback? And there comes the answer for us. If we take a look at the 30-minute chart, we've got an upward sloping 10, a downward sloping fast SMI, an upward sloping slow SMI. And so the slow SMI and the moving average are going to win that game because they are also sitting at a very important support level. So a pullback here and saying, hey, listen, I'm going to short, not a wise formation at this juncture. Now, if it moves sideways, drops, and then retests, and you're sitting underneath that 10, you got a totally different game. But right here, all the pullbacks suggest buying opportunities into resistance, right? We know that resistance is just above. We've got to think about it from that perspective, but we cannot think about it in terms of shorting because everything says, hey, listen, we are stuck in buy zones. And so we should stay where the momentum and the formation tells us. And here, if we come in right down into the 5-minute chart, we're going to see that we're caught in a space sitting above the 50, above the 10, negative sloping momentum in the slow SMI, positive sloping momentum in the fast SMI. This slow SMI tells me I am near resistance events, and the fast SMI is just telling me that I have into resistance to make my trade. So where is that? If you go, hey, listen, I'm taking it long here, you have to realize that there is selling pressure up here at 2084. So if you say, well, wait a second, I'm going to wait until it gets above 2084.50, will I have a formation that will allow me to move past those levels if that happens? And the answer is very likely yes, because you'll have a sloping action for your fast SMI and continuation, right? You'll have the breach of resistance, which gives you another opportunity. Let me make this really what it ought to be. You have a breach of resistance that tells you if this is pushing upward, it's going to send you into the next line of resistance, which is going to be that Globex event, right? So you've got to wait until it gets above this level or gamble and take it here. Really, that's the only thing that is showing from that perspective. To me, taking it long here just because these moving averages are sitting here, the most important divergence pattern showing is that slow SMI drifting downward while the fast SMI is moving up. You know all it's got is a move into a resistance zone where selling pressure is sitting. And we can see that a little bit if we look at the hourly chart and we notice the close of these candlesticks have been consistently lower, right? Close here. Overall, we have lower levels, so we're going to be drifting into the support area. Tough region to say, hey, listen, I'm going to take a long or take a short, wait for the breakout of the levels, or wait for the breakdown and retest of the levels. For the TF, we've got the same sort of formation, little bit of topping action. Hey, listen, the TF is doing one better than the ES. It's come up into its weekly 10 and its weekly 50. It's breached the level. It's telling us that legitimately this chart is looking to base a new higher support level. Wow. So let's take a look at this. Again, little bit of that is really, let's take a bigger look at this one. We can see that for the Russell, risk on is still a likely space, and we have really a little bit of a channel event that's gotten broken, and so we should come back. let's extend this to the right. We should come back at least up into this region right here. So this is showing upside measures for the chart overall. The problem is that 50 is flat, and so that rejection area should be likely. On top of that, we have a negative sloping, slow SMI right in the neutral zone, so there's not a ton that says, hey, listen, this is going to be a breakout event. A lot of folks think that we're breaching some kind of formation. Listen, it looks good. It just does not look like it's going to last. And that is the question. Now, is it telegraphing upside motion more so than the ES? Yes, it certainly is. Has it still got these lower lows and lower highs coming into the hourly candlesticks? Yes, it certainly does. Same sort of mixed momentum. What's the big thing that happened here? The big thing that happened is that we breached the 50 on the daily. So that's the big important thing. What should we do? We should come back to test it. Now, you could say, hey, listen, didn't we already do that on the 4-hour chart right here? And the answer to that is potentially yes, but we are rejecting the weekly 10. And so looking at that formation, if we've got that weekly 10 and we're staring it down, we can see that it's likely that we test it again based on this upside drift right here that we've got. Do we have the same sort of technical divergence that we see in the ES? Yes, absolutely. We're seeing the same thing caught between the moving averages. To me, it seems very legitimate that if we double top, moving really back up into the Globex, that we eventually come back down here into this 1250 to reestablish range of motion. Is it sitting on top both of the moving averages on the 5-minute? Well, in the ES it is. TF, not so much. Caught between the spaces. Look at the momentum pushing up, negative drift. So we know we've got sellers sitting here at the congestion levels. Is it legitimate that we come into them? Yes, absolutely. Can we look at this 50 and go, you know what, I should breach that? The answer there is yes. Essentially, you should go ahead and breach this like it's not there, simply because the real resistance area appears to be a little bit higher. Is there a slam dunk waiting here? I don't see one, not even remotely. Taking a look at the NQ, let's take a look at the big thing that's happened here and something, from the daily perspective, we've got the same test, right? We have a downward sloping segment in the 50. We've come up into the region. We're now in this gapped area before the Greek news, before the big collapse in the Shanghai markets. And so we're sitting here in this space where it is legitimate resistance. We have negative sloping momentum in that slow SMI, fast SMI drifting up. What should we do? We should test it. Could we breach it? Yes, but the game here is to come back into that level and pull back to see if we hold to move higher to the upside. Let's take a look at the 4-hour chart. 4-hour formations showing a positive crossover here in the early morning, wee hours actually, right? Sunday, breached the level, retested the level. That's a nice, pretty 4-hour formation. What did we do? We tested it and retested, gave us a higher low overall, telegraphing a higher high. What's the formation event? Should dribble around up here, right? Everybody talking about the Fed wanting to raise rates, seeing that a lot. Listen, to me, that's going to be happening somewhere in September. It's the broken record that I've been chanting all year. We are not going to get out of our trading ranges until the summer is done and we come into that fourth quarter event and begin that fourth quarter event or close the third quarter. Just is shaping up to be that way. And so still sitting in a trading range, what are we looking at? Smaller candlestick bodies. So we know that the force of pressure to the upside, holy messages galore, the pressure to the upside is waning a little bit. Listen, if we breach 44, 49, 25, we've got enough momentum to punch us up into 44.60. It seems fairly legitimate. Now, could it be that sellers are waiting for us at 44.55? Yes. So be alert. Be alert that sellers might be here, take some profit at the measure, but the big move here was the move off of this breakout area, 43.89. We saw it last week. And then, of course, the recapture of the level and then a hold of the 44.10 area, punching us up into this region. This seems very legitimate. If the sellers step into the space, they should step into the space about 44.61, somewhere around here. Look at this wick. Right here, it's 44.60. Let's raise this 44.57 into that 44.59.75 area. Keep your eyeballs alert on that space. Let's go right into the 30-minute chart. What are we seeing? Negative momentum, negative divergence for sure. Location is key here. Look at the location. Positive, positive, positive. Positive, even on the 5-minute. So the momentum in short order gives us the upside pressure that we anticipate will take us up into these levels. All right, big picture says it's not there to say. Small picture says we can trade it into those spaces. Could you have a wide area of support? Yeah, it could be all the way down here at 44.38.75, 44.42, but the pressure on the 5-minute, looking at this 44.40 area as the pop out, I mean, take a look. Slope and location everywhere telling us that we have upside pressure into resistance. All right, let's take a look at the CL. Okay, overall, chart still has negative momentum overall, right? It's got some negative drift. Let's take a look at the big picture. What did we see? Collapse of the wedge, completion of the formation, right? Here's the big picture that I drew. Crumbs, where is that one? Hang on a second. Aha, here we go. Hang on. Okay, let me show you this picture. This is a bullish Gartley, right? And so the bullish Gartley tells us, listen, we could have a move a little bit lower, right? Chances are we're right at it, though. We could, but we're right at the support region. And so what we're looking at is momentum indicators that really are starting to drift upward, but have a lot of negative press associated with it. And so the pops up should really be into resistance. And that resistance should give us another downside press overall in the chart. So we've got a lot of negative action sitting here at potential support regions. Let me, no, I'm going to delete this one because I think 5130 is the real number for us to look at. And I need to change that. Again, what's the important thing that's happening right now? The important thing is that's happening is that the chart is sitting at a space that it's bounced off a bottoming event a couple of times. And actually, if we want to look at it, it's really been 3 times that it's come into this 5130 area and moved itself forward. And I can see that the real level to watch here is 51.75. And of course, we've talked about that a little bit. So what do we see? Below 51.75 is going to be a continuation short. Why, Anne-Marie, are you saying it's a continuation short? Because let's look at the big picture. What happened to us on, I don't know why I have so many duplicates here. What happened to us on Friday? What happened to us is that we had a bounce zone and we moved all the way up into this 5390-ish area. 5390. And that 5390 area really brought the sellers out in big form. So what is it that a chart is supposed to do if it comes into a resistance region, which incidentally is actually right here? This 5390 area is right there. Yeah, that's what that is. Yeah. That 5390 area really does give us that space where we go, okay, I can see the wick here, I can see that wick there. We really rejected that area. If we reject that area, it means we've got to come down into support. If we come down into the support area that should hold, the 5260 area, it should hold. If it doesn't, the question is, okay, what does that mean? If support doesn't hold there, it means it's drifting into the next line of support. Here, it loses that line of relative support right around this area. We're using the daily chart to help us with that level. And the loss of that space takes us into the lower wicks from where the chart's able to bounce. So now what? It's coming back into a new area of resistance. So what do we have? A high, a lower high, a lower low, another lower high. It is telegraphing to us that if the sellers are not overpowered here by buyers at this 5170, we've got ourselves a continuation down short into support. Do we have momentum telling us this is about to happen? We've got a fast SMI. We've got both slow SMIs in negative trending territory, though trying to lift here, but it can't seem to get above the space. We have a fast SMI moving down, a slow SMI that's flat in negative trending territory. That means that sellers are going to be in the region. And so if we take a look at that area, we know that we see the sellers coming into the region. Let's go to the tighter time frame. What does it show us? Rejection off that 50, moving down into an area that people are trying to buy. Is this an area to short here? You can't, because you don't know if the momentum that's being pressed forward here, which says, hey, listen, I'm going into resistance, and we just made a passage into resistance right over here, and this is continuing to move. If it moves to the upside, it could easily do that. Otherwise, it is going to rotate downward. We are going to find lower levels. The big thing is that we fail to recapture a level that should hold, and that's 52.66. It is not holding. We are seeing downside momentum. Below 51.77, we should carry through into these lower levels, 51.55, 51.30, and then potentially lower. Are we going to have sideways action in general today? My thought is yes. Okay, there's a lot of sideways events, so I am looking for level to level trading in oil. Let's go ahead and jump into our next group. We take a look at Apple. Apple got some upgrades today. Listen, something's wrong with Apple. It feels broken. And I know that that's a weird thing to say because it's Apple. It just doesn't feel like it's holding on to anything significant here. And so right now we are at resistance. Let's take a look at the big picture. What did we do? We came down and we tested extremely significant levels of support. Extremely significant levels of support. And so we did it. We bounced off of the region. What should we do? We should move into resistance. What did we do? We moved into resistance. Right here, could not recapture this region. That's going to be the area for us to look at. What's about to happen here? Now, this morning pre-market, we're all the way up here at 124.91. Interestingly enough, that's the base of the channel. If we breach it, look at the slope of these guys. That's buying pressure. Look at the buying pressure here. Look at the slope. Look at the slope, right? Momentum looks divergent, but that's because we're sitting up here at 80. I mean, how much more divergent could that get? We have a punch to the upside here. Guess what? It's going to be into resistance. And so you need to wait for the pullback event. What's that pullback event? 125.79. You've got to let the chart settle out. Do not be overly anxious here to buy Apple long on the hold. Could you buy Apple long on the quick swing? Yes, absolutely. Intraday, maybe a day and a half, couple of days even, but that's all that this chart has got. It's coming into resistance. The 10 on the daily is almost right where the 50 on the 4-hour is. And so sellers are going to try to do something probably at the 125.30 level. So we'll watch it punch up. If it comes back down and holds it, folks, you've got yourself a long intraday. Other than that, not a very good motion in the chart. Look at this one. Hey, Netflix has got a 7-for-1 split. Everybody wants to get involved in some measure or not. Here's what's likely to happen. We've got the 7-to-1 split, and so the chart should pull back just a tiny bit coming into earnings. Earnings going to be the day after the 7-to-1 split. That's going to make the chart super noisy like. There goes the bell, so we want to watch for our motion here. All right, the 7-to-1 split's going to make things a little bit messy. Options going to be very noisy, big bid-ask spreads. What's the bottom line? This chart has got upside momentum. Look at the location of the majority of the momentum indicators, either punching upward or in trending territory, right? So trending territory, punching upward, and in trending territory, punching upward, and in trending territory, and so on and so forth. Big bounces here. What should we see? Remember, breakout fashion should pull back and test a higher low. Is this a space where you want to buy some? That's your bag, right? Option chains really a little wide. Some opportunity there, but not a ton for us overall. Okay, let's take a look at Tesla. All right, if we take a look at Tesla, we can see it's just completed this U-shaped formation off of the low over the last month or so. Broke out nicely, came right back in to test the regions. Now what we've got is a big, gigantic wick. Listen, if you can get yourself up over this area, the 262-ish, 263-ish area, this chart does have some upside momentum. It is very noisy here, very, very noisy. There is a group of sellers sitting at around 263. If we break the area and then retest the area, that's going to be the ideal trade. As of now, this thing is in a little bit of a pennant. And with a pennant, it normally breaks in the direction of the pole, and that the pole is downside. So you want to watch this particular trend line. I think the levels from yesterday, from Friday or Thursday that I gave you are the same levels to watch today. And that is the 20, the 260-10 region. That is going to give us the breakdown of the area, but you can see that pennant being very, very strong right there, and that clearly looking like there's some problems potentially on the horizon with this one. Negative momentum sitting right here. Mixed momentum sitting right here. So you want to wait for the retest. This looks like a really messy chart. Wouldn't really get involved with this one today. If it breaches over 263, comes back and retests it and holds, that's great. Notice what happened the last time. It punched up into the level, rotated right over and right down. So watch for weakness developing from that space as well. Again, don't really think Tesla is a pretty chart to work with right now, because very easily it could find support at that 260-10 area, and that could turn into a bounce zone as opposed to a resistance zone. So you wait for the retest of the formation. With Baidu, look at that. That is so... 5175, the perfect breakdown area for this chart to know that we're in good shape, and it did not do it. 5196 turning into another resistance zone for us in the chart overall. Hang on 2 seconds, folks. Always with my eyeballs on oil. As you know, this is a resistance zone. A lot of sellers at this 5196 area, so could be a good area to stage a short, though we might end up seeing a punch into 52.10. Oil's been running a little bit with the market lately as we see the ES pop up over that level. Remember I said above the 2084 area, everything's pointing to follow through. If you took that long, you're in good shape. Take a little profit, move your stop to break even, and then just let it go. It's going to go into the 2087 to 2089 region. That is a move that's completely telegraphed by the formations. Taking a look at Baidu, a little bit of a mess. This has some China effect, just like Baba, and so many other charts that have a significant presence over there. And so Baidu is particularly interesting to watch. Problem is it's got earnings coming up, and so we're going to have elevated risk in the price of the options. What should we be seeing? Listen, it bounced off of a really sharp low, has held the level several days in a row. Listen, if we lose 187, that's all she wrote. Going to be a problem in the charts. If we've spent 3 days struggling here and we can't hold 187, we are going to collapse back down where the buyers are essentially stronger. Now, what are the buyers shoving the price up here trying to get to? Well, they're trying to get to here, that 194 area that seems really far away right now because the sellers keep advancing from the top. What's the notion that we have here then? Hey, listen, above the pre-market low at that 190.13 area, you've got yourself some long action, right? Long action going to sit right there for you, and it's going to look fairly good. But inside of that, you've got nothing but noise. You've got some upside momentum. Whoops. You've got some upside momentum, but overall, wrong chart. Oh, beautiful. Oh, love it. But in the end, this chart is in a decision zone. And so you want to watch that very, very carefully. Notice the use of the daily lows and closes, because that really does tell us where big money is watching for the end of the day. All right, taking a look at Yahoo, this one's been coming up off of a bounce. I talked about the bounce zone early last week. The chart has held the bounce, but now sitting at resistance zones, really having a tough time at the resistance areas. Yahoo, you know, this chart's in trouble anyway. And so you can see it doing the same kind of thing that Baidu is trying to do. It is really trying to get itself into that 50 simple moving average. But what do we have? A pennant, right? We've got a little bit of a pennant here, and those pennants tend to break in the direction of the pole. So what are we looking at in terms of real breakdown events? You know, if this chart loses 3780, 3770, it's got a really rough patch coming in front of it. Now, do we have momentum pressing upside? Yes, we do, in a number of different spaces. So we know that upside is into resistance. We're sitting on top of some moving averages here, so we should bounce off of support, but that support should be very mild in the grand scheme of things. 3770 to 3760, a problem in those charts, really, in terms of holding support. Facebook had a great run. Good upside press. Let's take a look at the big event that occurred in this chart. What was the big thing that happened? And the big thing that happened a couple of days ago is that it bounced out of the formation that it was sideways in, right? That bounced out. It telegraphed itself up into a termination zone, a 127.2 retracement, came back down and held a brand new area of support. This is a big deal here. This is a big region of support. And let me remove this line. That big region of support says, hey, listen, my buyers have extended themselves into this area. So what have I got to do? We've talked about this level over and over again, 87.20. If we hold 87.20, we're going to have ourselves upside momentum. Look what it does. It holds 87.20. It goes to 88.20 and then collapses all the way back down into 85 before moving all the way back up. How do you take that trade? Listen, if you wait for the retest of the formation and you look at something like this and you see all this negative press, you've got to wait for the price to hold and close about the level. And that really, the only thing that we could do right there is today's price action if we're looking at it from a daily. If we're looking at it from a 4-hour perspective, we could see that intraday on Friday, we had ourselves this retest area to hold 87.20 that is now going to propel us back into our 89.60. What do we have? Peak to peak. Look at the momentum. It's holding from a slow SMI perspective. Fast SMI, not so much. We've got negative divergence on that fast SMI, but look at these slopes. These slopes are very steep, so you expect it to breach the level, but then once you breach the level, you're going to have a region of resistance that should come clearly into view. All right, and that's it for the morning report for these guys. Let's get back to the big group. And I think that's these guys. I can't even remember. Let's see. I was listening to this very interesting TED Talk that talks about why our memories are the way they are, and it's because we've got all these things that we don't need to remember. I don't need to remember that. I'll just put that on my calendar. I don't need to remember that. So we are building who we are as individuals, as these folks who don't need to remember anything. And that's really quite profound, right? I mean, think of all the things that we have to help us remember. We can write things down. We've got, back in the day, everything was based on memory, right? The oral tradition. We have thousands of years of oral tradition. And then all of a sudden, writing comes around and we don't really feel like we got to learn anything. Wow, that's noisy. Okay, let's stop this recording here.